Welcome to another episode of Phillip Trading Podcast. My name is William, and our speaker today is Mr. Bong Jeen Hao, Chief Master Trainer of Street Finance. Today we will talk about the power of trend following. And for those that are watching this episode, feel free to share this section to all your friends on Facebook. If you have any questions or you have any comments, feel free to comment in the comment box below or ask us any questions. So, Jing Hao, how are you today?
Very good.
Good to hear that. Okay, so Jing Hao, you shared a lot about trend following strategies in your last two webinars. Can you briefly explain what is trend following strategy and its methodology in case some of our audience didn't attend our last two webinars?
Okay, so basically in trend following, we believe in a few things. The first thing is a trend will have higher probability to continue or resume rather than reverse. So meaning that an uptrend has higher probability to go up rather than go down. And in a downtrend, it will have higher probability to go down rather than go up. So this is the first thing that we have already backtest, okay, statistically. So the second thing is, as a trend follower or as any kind of traders or position traders who employ the strategy, the trend following strategy, we basically follow the trend. What does it mean by follow the trend? Meaning that if it is an uptrend, we will look into buying, and then we will hold until the trend reverse down into a downtrend. So you have most probably heard before, like the trend is our friend until it bends. Okay. And on the other hand, if the stock or anything, okay, is in a downtrend, we do not look into buying because that is actually going against the trend. That's counter trend. So in a downtrend, traders will look into opportunity to go short instead of going long. So in the context of shares or stock, for example, usually we are long only, meaning that we only look into going long. So we focus a lot more in uptrending stocks. So these are the basic things that we have to know before talking about and learning trend following strategy and the belief behind this strategy and method as a whole.
Okay. So basically, just stocks that is going up is going to go higher and higher and higher again. Okay, so this is
basically
we want to
basically there is no too high for a bull and there is no too low for a bear.
Okay, great. Okay, just to add on a little bit, for those that are interested to watch our two previous episodes with Mr. Bong Jeen Hao here, and you miss it on our webinars on how to capture a big trend and how to manage your risk, you can watch our recorded video. You can search our YouTube on our YouTube channel at Phillip Futures Sdn Bhd. You should be able to really watch them. Okay, so next question here for you, Mr. Bong, is that I believe this is the questions that a lot of newbie like to ask. We as a retailer and our capital is very limited. Do you think it's more appropriate for us to use fundamental or technical to invest to grow our portfolio? And also, why is it?
Okay, so let me share a little bit about my experience, because I came from a fundamentalist, okay, to a technicalist, because back then I don't have a lot of capital. I start my journey with only 1,000 plus minus. Okay, that was my first pool of capital working part-time. Okay, of course, progressively I do a lot of top-up, but that was after the fact that I learned technicals. Okay, so when our capital is small, in my opinion, we have to use technical analysis because we need the capital gain. We want to grow the portfolio slightly faster than what most people are doing out there. So when we are talking about fundamental, a lot of time we buy into an sort of investing into companies that has great fundamentals, great value, or when it's undervalued. But these stocks, the big question mark is we do not know when they will go up, or will they even go up. This is the question. You might be buying a fundamental sounding company, but what if for the next 6 months or 1 year, the stock is not moving, it is not going, your hard-earned money, okay, is not working hard enough for you. So that's why if you have a rather limited or small capital, I would say that trading is the way to go. Okay, trading is the way to go, and then you need to learn technical analysis. Okay, because with technical analysis, you will be able to grow your capital in a faster manner, because the capital gain will usually come in a little bit faster than as opposed to a person who utilize fundamental analysis. It is actually a big topic, okay, like investing versus trading. I would say that if your capital is small, you need capital gain to grow your portfolio. So trading is more appropriate than investing. So when you have a bigger portfolio, investing make more sense, because when your portfolio is small, let's say you buy 10,000 worth of a share, and that share give you like 5% dividend. Yes, 5% dividend yield is great. It's better than FD, 2 times better than FD now. But again, it is like you stay invested for 1 year in this stock, and what you get is 500 ringgit worth of dividend return. Yes, 5% dividend yield is good, but it is not a life-changing amount. We have to accept that. And some more, what if the stock price go down?
Yep.
Okay, so the second part of your question is about leveraging. Am I right?
Yeah. So basically, do you think it's advisable for people with small capital to incorporate leverage product like CFD to speed up our growth of our portfolio?
I think this depends on the trader's capability when it comes to trading in the market. So if you are a trader who can have a great risk reward ratio, meaning that every time you make money, you make like 2 times or 3 times what you risk, okay, it means that you are having a good risk reward. And another one is win rate. So these two come hand in hand, okay? Your win rate and your risk reward ratio. You got to understand these 2 things, and then you will know that whether or not you are profitable. So after you know that you're a profitable trader, we call it a metrics. This is a trader's sort of like metrics. Once you know that your metrics can yield a positive result, then only you go and use leverage. Because if you are not a good trader at first place, leveraging doesn't do any good. It just magnify how bad you are as a trader. So I think leverage or not, it much depends on the experience and the confidence of the trader himself or herself. Okay, and how well does the person understand, okay, his edge or his or her odds in the market. I think this is very important before thinking about leveraging with products like CFD, okay, in the market. Of course, if you know your odds in the market, it will be better, okay, it will be good if you can take a little bit of like leverage to create a greater outcome. But the caveat is, at first place, you need to make sure that you are a profitable trader. Yeah, you are a trained traders.
Yeah. Okay. So for those that are interested to know how you can leverage your portfolio with our Phillip Futures CFD on Bursa and US stocks, you can inbox us. We will try to let you know more about it. Okay. So next question here. In your sharing on your webinars last week, you mentioned that most of the stocks that you trade or most of the stocks that are in your watch list, they are either 52 weeks high or is trading at all-time high. So does that mean you will use the 52 weeks high filter to select the stocks to put in your watch list or to trade? Is there any other ways for you to filter stocks?
That is my primary way of choosing stock. The best quality stock for me is stocks that is trading at all-time high. Next to that would be a 52 weeks high. Basically, if a stock is not at 52 weeks high, I will not even look at it most of the time unless there is a what we call a team play, okay, in a market. Like suddenly there is a team in a market that all these sectors or related stocks go together. But most of the time, I would favor stocks that are at an all-time high and 52 weeks high. Just a lot of people cannot accept this. They think that this is a ridiculous idea. But I think for those who think that this is a ridiculous idea, you just try to recall any stocks that you see the stock, okay, goes up every single week, every month it breaks new high, but you're not in it. Or you might feel like buying, but you feel that it is expensive to buy, and that stock just goes higher and higher and higher and higher. Okay, so again, this is coupled with the philosophy, okay, and the core belief of trend following, because trend will usually continues rather than reverse back down. So this is actually my primary way of selecting stocks. Of course, the next question is how are we going to buy it? Then that would depend on personal preference. Do you like to buy when the stock break out, or do you like to buy when the stock is pull back at a support, or do you like to buy when the stock is maybe they have a pullback and then they rebound from the pullback, whereby it shows you that there is a trend continuation signs. Okay, that would be up to personal preference, but pattern wise, all-time high or 52 weeks high.
Okay, great. So that's your personal way of selecting stocks. 52 weeks high or all-time high. Okay, great. So just one last question, and this question is more about the opinion on our Malaysia KLCI index and also on the US big three main indexes, which is Dow Jones, S&P 500, and Nasdaq. Okay, so basically Malaysia index is currently moving on a sideway to a downtrend, so which is showing weakness. But the US indexes has actually break new high, okay, on the 20th of January, together with Joe Biden admission to the US presidential office officially. Okay, so with these both trend that we see in KLCI and US indexes, what kind of direction do you forecast both of these two countries' indexes in the next 1 to 3 months using technical analysis?
So basically, let's talk about the US first. So the US major indexes or indices are trading at an all-time high, signaling that the stock market is pretty strong, is bullish, and there's no way for us to say that the market is bearish because the trend is there. Of course, the next question is what stocks you are looking at is a different story. Okay, because we have to understand that the index is all-time high. That's true, but it doesn't mean that the stocks that you are watching or holding are at the all-time high or are in an uptrend. So if we talk about the US market as a whole, definitely it is more towards the bullish side rather than bearish, except for maybe a little bit of a pullback or correction that shake out some of the traders out there without good holding power. So personally, at a point of speaking, I'm still bullish towards the US market. Now, come back to Malaysia market. I think that Malaysia market, in my very personal point of view, okay, our KLCI is not a good benchmark to market performance. This is from my perspective. Okay, because for example, in 2019, the index, our KLCI is not doing well. But does that mean that you cannot make money in the market? Of course, if you hold the top 30 index components, you cannot make money because most of them are not doing well. However, in the market, there are some great stocks in the market that are non-index component. They are maybe in the FBM 70 or even the lower liners. So a lot of technology stocks, for instance, for example, okay, were really great in 2019 or even 2020. Okay, so that is the thing about Malaysia market. We need to go into the sector, okay, and look at different kind of indexes, okay, instead of just judging the market performance based on the FBM KLCI itself. So we have like a lot more indices that we can analyze. For example, the FBM 70 and even the sectors like technology sector index, whatever, plantation index, healthcare index, to really select sectors that are strong.
Okay.
That is my opinion. And definitely in Malaysia market, there are a few sectors that are better than the average. So our focus is to find out those sectors and then watch the strong stocks within that sector, because not necessarily every components of that index is going up. So we select from there.
Okay. So overall, in short, we would say that even if the KLCI index is not really doing well, but still there are lots of opportunities in the smaller cap stocks. So we just need to ride the stocks with the right trend, and follow them. Okay. So overall, we have been focusing a lot about trend following. Okay. So I hope all of you is able to kind of at least try to look into it on how you can ride on the trend to really profit from it. And for those that are interested to know how you can trade Phillip CFD with Phillip Futures on Bursa and US stocks, we offer really great margin. Okay, feel free to drop us a message via Facebook, and our representative will contact you the soonest possible. Okay, thank you, Mr. Bong Jeen Hao, and see you.
Thanks. See you. Bye.
Bye bye.